guys. Just want to thank Jessie for coming out. She's a great friend of mine, and we always talk about commercial loans and that type of thing. So with that being said, we're gonna, just jump into our discussion and just talk about, of course, SBA loan program basics and things like that. So with that being said, I'm going to give Jessie the floor, and she's going to take it from here.
All right. Thank you so much, Wendell. I do appreciate it. The intent is to go through, this is our second in a series of multiple training sessions on SBA loans. I was going to go into part 2. We had covered some of the basics last time around, so while I'm scrolling through them, if somebody sees something on the screen that they want me to talk about, let me know. But at this point, I'm going to go on to where we had stopped last time around, which was eligible use of loan proceeds for SBA loans. Most of the time, we are looking at using SBA loans to purchase or refinance real estate. It could be a commercial building, but it has to be a business-occupied piece of real estate. It's not investment real estate. It's not apartments or anything like that. And the small business has to occupy 51% of the space in order for it to be eligible for the SBA program. We can also use the SBA program for vacant land purchases and then the construction of a building to be utilized by the small business. A lot of times we're buying buying real estate and then improving the real estate, expanding it and renovating it. Sometimes it is a leasehold situation. Let's say, for example, we have a startup franchise of some sort. They're leasing space. SBA loans can also be used to improve that lease space. Also buy or refinance equipment. I say refinance equipment leases or loans. We always have to show that we're providing a benefit and lowering the existing payment by at least 10% in order to be utilizing the SBA program for that purpose, though. So usually it's when the interest rate's higher or the amortization is shorter. Just this past year, back in November of this year, the SBA also changed their rules to now allow an SBA lender to refinance an existing SBA loan if it has a higher interest rate and a higher payment. This is a big deal because for many years that was not allowed, and it was extremely difficult to refinance. So if somebody has a interest rate of prime plus 2.75% because they got that loan back in 2020 or 2021 or prior to that period when rates were significantly lower, today they may be able to move into a new loan that's prime plus 1.5, and again save themselves quite a bit of money. The big key, though, is refinancing business debt only is allowed as long as the payments have not been past due by more than 30 days for the last 12 months. SBA loans are also used to buy inventory and provide permanent working capital, but most of the time, inventory and working capital is financed in addition to some of the other uses. Somebody's again, either starting up a business or buying a business or a building, and then they might want to also expand their product offerings, and they need to buy a large amount of inventory. It's very rare that banks are making pure working capital loans or inventory loans, although it's allowed. There are a lot of rules and regulations about those, and they're just not as easy to get approval on those. You can also use SBA loans to buy a company, and that includes buying stock or an asset sale, 100% of a company. And again, this is a new rule change effective last year. You can also use an SBA loan today to buy a portion of somebody's business. So let's say you've got a company that there are 4 operators and owners, and 3 of them want to retire and 1 does not. He can remain on, so that's a huge deal for us SBA lenders, because so many times in the past we just couldn't help those kind of situations. SBA loans are also used to buy out a partner. Maybe because there's been a divorce between a husband and wife and they both own the company. Or again, somebody wants to retire and the other business owner simply wants to continue operating that business. They need to buy that person out. Any one of those scenarios, SBA allows us to do a 10-year term on the repayment. So it's very attractive compared to without this program. A bank would maybe look at a 2 or 3, 4-year buyout. Also, just note all of the related closing costs, including the SBA guarantee fee, appraisal, attorney's costs, filing fees, etc. Those can also be included and are always part of the project cost. So when we talk about down payments then later on, we're talking about down payments associated with the total project cost, not just the purchase price of something.
Hey, Jeff, quick question. So in regards to the total cost, so can some of those costs be rolled into the loan, or is that something that they would have to pay out of pocket?
No, absolutely.
I would say pay out of pocket.
Is that you can include all of those costs in the loan itself.
I'd say the pay.
JJ, did you say something? You're on mute, but then there must be some times where you're off mute.
Oh, I said pay out of pocket.
Yeah, costs that some people would have to pay out of pocket can be rolled into the SBA loan. What you can't use SBA funding for is to pay taxes, whether they be current or delinquent. Also, if somebody is coming to me saying they want to cash out because they own some real estate that's got equity, that's not an SBA loan. I have to ask them, well, what's the money going to be used for? If they say it's to put into another business, well, that's not eligible. But sometimes it's to put into their own business for working capital purposes. I can make that loan, but we don't call it a cash out. I call it a working capital loan secured by, maybe real estate.
Isn't there a shark loan? I think it's called.
A shark loan?
Yeah.
There are. Not through the SBA program. I mean, Wendell, you may want to, there are some other types of loan products that somebody might consider to be high interest rate and hard money loans.
Yeah, but even those aren't shark loans, so.
Right. The term shark loans, that's not really a term in our business.
Yeah, I think that's old school mafia type stuff, So, yeah, not in this kind of. Not in this environment. You don't see anything like that. So,
SBA also does not allow finance or funding to go towards distributions, shareholder notes, anything where it's not beneficial to the business. It might be beneficial to a principal. Those are not SBA type of a product. So, but the key is whenever somebody's looking for financing, what exactly is the money to be used for? Not what's the collateral to secure it, but what will the money be used for? That determines eligibility. Repayment terms. We've talked about this before. Based upon the use of funds, not collateral. If you're buying real estate or you're refinancing real estate, SBA goes all the way up to 25 years. If you are buying some new equipment and it doesn't have a useful life beyond 10 years, you should expect a 10-year loan. So that could be really small pieces of equipment. We're not generally financing trucks and trailers very often, but a heavy-duty printing press or manufacturing equipment of that nature is not uncommon to be financed under the SBA. And a lot of times, I find myself being asked to consolidate a lot of leases that were used to buy separate pieces of equipment. And those leases are oftentimes 7 years, maybe 5 years. SBA goes 10 years, so we can usually get a much lower payment for a borrower. If the use of funds is for multiple purposes, including a real estate purchase, if the real estate component is more than 51% of the total project, then I can also offer 25 years. If it's to buy a business without real estate, the term is 10 years. And this is a new one. If you're buying a business and real estate, again, there's only 2 options. The real estate is worth and allocated and supported by an appraisal to equal 51% of the entire project. And I use the air quotes for project because, again, it's the purchase of the business, purchase of the real estate, closing costs, maybe working capital, maybe inventory, you know, all those other things make up the project. If the real estate is over 51%, then you'll get a 25-year loan on the entire thing. If it's less than that 51%, SBA says either it's a 10-year loan, no weighted average, or we can make two separate loans, one that's for the real estate and one that is for the other asset. Real estate 25 years.
Okay, so back to the 10 years for the equipment. Now, what's the smallest dollar amount that we can do for the equipment if they're looking to do equipment purchases? So let's say that is not a freestanding piece of real estate, right? You know, they're in one of those strip plazas or something like that. So how does something like that work if someone is looking to purchase an existing business along with the equipment and everything?
Well, if you're buying, you know, a business that includes equipment that business owns, that is a 10-year note. Okay. If you know you asked the question, what's the smallest dollar amount?
Mm-hmm.
I wish I could give you a black and white, you know, but it depends. You know, I'll go as low as $100,000 on a piece of real estate, and the reason is SBA loans. Banks make money on a 25-year loan. They make a lot less money on a 10-year loan because they are sold in the secondary market. And the 25-year loans, we get paid a much nicer premium. If I'm asked to do a construction loan, I'm not going to do a small loan. I might say 350 is my minimum. Okay. If it's, you know, working capital, same sort of thing. I'm not going to, I don't want to be doing small working capital loans. We have other lenders out there that specialize in working capital loans that I can refer them to. So there's a lot that goes into, you know, what's the minimum dollar amount. SBA doesn't have a minimum. Let me be clear. I
Right.
trained specifically for myself at Incredible Bank.
Right.
And when I worked for other SBA lenders, we all had our own minimums. And, you know, sometimes we change that dollar amount based upon what's going on because maybe I don't have anything else in my pipeline. You know how that goes.
Right. Makes sense.
One thing I do want to make clear, for SBA lenders, there are loans that fully fund at closing and all the money is out the door. And then there are loans that, for different reasons, are multiple disbursements. The fully funding loans are much more attractive to them. SBA guarantees, the guarantee portion, are sold in the secondary market. They can't be sold until the loan fully funds. And so if that's why a real estate purchase without construction or a business acquisition is more attractive because it's fully funding in one time. When it comes to, you know, a franchise transaction, you know, I'm going to use trampoline parks. They were very big for a while, and we did a lot of them. And they were big deals, like $1 million, because they had to put all this equipment inside a leased space. But, you know, that kind of equipment generally isn't, it's not very expensive, but there's a lot of it, right? There's a lot of little pieces and that sort of thing. Those kinds of loans today are less desirable because they'll be in the construction mode for 5, 6, 7 months. I'll still do them, but I'm not going to do a small deal. You know, I'm never going to do a $150,000 leasehold improvement deal. I might do $1 million one. Okay. Here's some other important things to know. The majority of the SBA loans are guaranteed at 75%. There is a program where loans can be, the bank can get a 90% guarantee. Businesses that sell internationally. So there's an international loan program. And the only downside for a borrower is they have to actually provide more detail about those international customers that they might have or are selling to. But it does help a lot of times for a bank to feel more comfortable with the deal because they are getting a 90% guarantee from the SBA. It could be that little factor that says, hey, you know, we were kind of okay with the deal when it was 75%, or maybe on the fence on the deal, but now that we're getting a 90% guarantee, we're all in and willing to approve it. So every time I'm dealing with any sort of manufacturer, typically that's your scenario where you're going to have some export type sales. I'm going to check and ask them questions about their exporting activity. For this fiscal year through the end of September, actually I should say the beginning of September, the SBA is waiving the SBA guarantee fee for all those loans that are $1 million and less. This is a pretty big deal. I mean, a lot of times one of the reasons that we bankers try to avoid the small loans is because smaller borrowers are more sensitive to all the fees that are associated with the transaction. This year, the fact that they don't have any for up to $1 million, I've done a lot more small loans. You know, a lot of them are $600,000, $700,000. Even for those loans that are over or up to $2 million, there are some reduced fees, but it's a pretty complex tiered pricing, so I don't go into it a whole lot. But again, reasons why we want to get more loans done in this fiscal year. Interest rates are determined by each individual bank. The SBA says, here's our maximum interest rate. And for most of the past 75 years, the maximum interest rate a bank could charge was prime rate plus 2.75%. And about 2 years ago, they raised it to 3%. For smaller loans, there are even higher interest rates that can be charged, up to over 6% over prime rate for the smallest loans. Again, to try to give the banks an incentive to do some of the smaller loans that otherwise they may not want to do. Most of the rates that most really active SBA lenders are offering are all variable. Again, tied to the prime rate, which is 8.5% today. So you're seeing a lot of 10.5%, 11.25% rates being tossed around, which goes back, Wendell, to our earlier conversation. A lot of deals don't cash flow at that level.
Yeah.
And here's the kicker. Banks, when they're doing their underwriting, we have to assume that during the life of that loan, there could be a rate increase and stress test it at, an additional 2 or 3% points above the starting interest rate.
Yeah.
Again, it's killed a lot of deals in the last few years.
Yeah.
A bank is required to attempt to fully secure a loan with all the business assets, even if we're not financing all the business assets. And if those assets are inadequate, banks are required to analyze all real estate that is owned by the principals or the shareholders and guarantors to try to fully secure that loan. Let me give you a great example. Somebody's buying a building for $1 million. They're only putting down 10%. That loan is not going to be fully secured for SBA regulations because the 10% doesn't include the closing costs that we're financing. And so the loan to value is probably going to be closer to 95 or even 100% loan to value. I'm sorry, it should be the other way around. Well, no, the loan will be greater than the value of the real estate, in other words.
Right.
And in those cases, we'll look at the balance sheet of the company and see if they have some unencumbered assets. Could be accounts receivable, could be inventory, but those assets don't give a lot of collateral value according to the SBA. They literally discount them 90% to come up with a collateral value, which isn't a lot. But they do look at the fixed assets on a company balance sheet. And again, if there are no other loans, we can take net book value, discounted 50% to come up with additional collateral to see if that's adequate. If not, then we're looking at oftentimes homes. If a person doesn't want, if they're dead against SBA taking a lien on their home, then they have to put in more money for the down payment, and they have to pay out of pocket so that the loan to value, is within the 85% LTV, because that's what the SBA says they will advance on real estate and be fully secured.
Okay.
Real estate purchases don't require a down payment. SBA does not have a minimum required equity contribution, but they have to be able to support the new loan request based upon the historical numbers. And if they can't or don't, then of course we're going to look to, well, how much can they afford? And, maybe it's 10% in, maybe it's 20% in. The difference between a conventional loan and a SBA loan when it comes to real estate generally is the down payment. And the SBA loan is fully amortizing with no balloons, no renewal periods. And I try to point that out to all people. Like, why would I go with an SBA loan for a building? Well, if you're not going to put 20 or 25% down and pay the fees out of pocket, SBA is a better route to go. Many times they don't have that cash, right?
Yeah.
Any individual or other corporations that have ownership in the small business that's 20% or more will have to provide a personal or a corporate guarantee. It's non-negotiable. That's problematic for someone, then SBA is not the route for them. Underwriting of an SBA loan usually takes about 2 to 3 weeks. Smaller loans should take a little bit less. Obviously, if there's a lot of complexity and a lot of borrowers or a lot of guarantors. I had a deal a few weeks ago where we had 23 co-borrowers.
23?
23. It was a multiple location. They had 23 different locations, and each location had its own legal entity. And they were refinancing debt that was used for many of those borrowers. So it was, yeah. So that took a little more than 3 weeks, but it actually was still done within four weeks.
Wow.
Yep.
Wow.
Yep.
Wow. Dang. 23. Wow. Okay.
And I had to get 23 sets of tax returns. And when I started the process, they had not completed their 23 returns, but they did. And actually there were more than that because they still had some other companies. So it was something closer to 26 tax returns and all.
Wow.
Yeah.
Wow.
But for $1.7 million deal.
$1.7 million?
Mm-hmm.
And it was 23 borrowers on $1.7 million.
The borrower was actually very organized. And I will tell you this, I'm also very organized when it comes to those kind of projects.
Yeah.
You just have to create charts that you're tracking everything that you're getting for every company.
Yeah.
But I mean, we don't go looking for those kinds of projects. Every now and then, and if they've got their act together, and it was despite it sounding complex, they all did the exact same thing. Each one of these businesses, it was just 4 different locations. So it really wasn't problematic compared to some projects.
Gotcha.
People always ask about closing and that sort of thing, and closing usually should be able to take place within 4 to 8 weeks after the loan's been approved and the borrower has accepted the commitment letter that a bank issues.
Okay. So in regards to that, so you're saying it could be anywhere between a 6-week to a 11-week process total.
Yeah, that should be the norm. Okay. There are a lot of reasons why a lot of deals take much longer than that. And some of them are one-offs. Somebody filed taxes and then had to do an amended tax return, and we can't get the IRS transcripts in a timely manner in that case. Or maybe there's some licenses someone's getting, and I have this gas station that they have to get a liquor license. Just the liquor license itself took more than 2 months to get. So there's always some exceptions to that. And I've also had some business purchases where there was no broker driving the deal and nobody seemed to be in a hurry, and they took a year to do. And painful for me, but it is what it is.
Yeah. I got you.
One of the important things that I try to convey to people is if somebody's coming, or wants to borrow money and they're buying something, whether it be a business, equipment, or real estate, they have to have a letter of intent, a purchase contract of some sort before a bank can formally do anything. We can talk about what ifs and offer term sheets, but when it comes to actual approvals, you need to have a written purchase contract. And that includes if you're going to be doing construction or anything of that nature. You've got to have the bids from a GC or different vendors, or estimates on the equipment, whatever it may be. You have to have those written for somebody to, make any sort of decisions. SBA is very paperwork intensive, and it's all about document. I think I've mentioned this before. I've just got it on here again, though. If you're buying a building, refinancing any real estate, the small business that is being underwritten must occupy at least 51% of that building. And if it's ground up new construction, then they have to be in 2/3 of that property.
Yeah, okay. All right. Well, Jesse, hey, it's been 30 minutes, so I guess we'll stop there and we'll pick up there next month. When should an SBA 7 loan be considered? So I guess we'll start that next month, and so hopefully we'll have some more participants that'll jump on. Like I said, I know we had some earlier, but I guess with the links and that type of thing, I guess they were not able to click on the link, I assume. But I'm going to work on cleaning it up after we disconnect. And look, thank you again. And look, I'm working to get us some deals. I'm telling you, I am working hard, Jesse.
I appreciate it very, very much. Kendall. I have a granddaughter named Kendall. I looked at your name and put that together. Wendell, next month then, or we're talking Tuesday, July 2nd?
It is July 2nd. I mean, it's up to you. I mean, if you want to skip, if you're going to be out of town, because I know you travel quite a bit, and sometimes you on your yacht and that type of thing. So
I will say that July 9th would be better because I may be out of town and such. So
okay.
Let's get that taken care of and make sure we got the right information so we can get some more participants. But thank you so much. I appreciate this time today.
Okay. All right, Jesse. Okay. Bye, my friend. Bye-bye. Bye, JJ.
Hey,